What's up, traders? What's up, tycoons? Super excited for today's video. Will the housing market crash the economy? We're going to dive into that today and take a look at the home builders ETF, down nearly 19% from its highs. We have XLRE. This is your real estate sector. I mean, this thing does not look good at all. The big question, will we be able to rebound here, or is it going to break down? That's what we highlighted last time I covered XLRE, and it's already started breaking down. And then we're going to take a look at KRE. This is the regional bank ETF, and the reason we're looking at this is because they hold a large portion of commercial real estate, which all has to be refinanced very soon, and interest rates have skyrocketed since then. So lots of good info we'll cover in today's video. But as always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. Sign up for my newsletter, guys. I have a completely free newsletter for you guys, actually talking about XHB. This was 2 months ago, going over the bearish setups that we had, talking about how they were on the brink of collapsing, right? A whole in-depth article going over it. You can see the date here, posted on August 18th. So this was a while ago, right? I mean, this is all the way back in August. We're at the end of October, approaching November now. So really good content in there. I try to give out free, valuable content as well as free trade ideas, sprinkle in some trade ideas in there. This was another one on Tesla. Okay, you can see how that Tesla trade played out very nicely. This was another one on SWK, highlighting the rising wedge. Okay, and that also played out very nicely. So if you're fans of free, valuable content and free trade ideas, sign up for that newsletter. The link is in the description. Okay. And if you want to join the Investment Intelligence Discord so you can get access to all of the trade ideas, there's also going to be a link in the description for that as well. Now, let's start going into some of the data behind what's really causing, the housing to collapse and why we really need to be cautious and pay close attention to it. So the first point we're going to look at is how mortgage demand remains historically weak. Okay, the MBA purchase index dropped, okay, to 129.8 from 137.5 over the past week. This is the lowest since February of 1995. So this is the lowest level, and we haven't seen this level this low since before I was even born. Okay, just to put it into some context for you guys. Now, according to Mortgage News Dailies, rates on 30-year fixed mortgages have hit 8%, and that's the highest since 2000. People are saying, okay, I've got people that are in the, that are mortgage professionals, okay, and, mortgage brokers, different things like that. They're saying that it's possible, we could see these things go up to 10%, all right? Now, hopefully not, all right, but it's a possibility. Permits beat expectations, but they tumbled 4.4% month over month, and it starts with missed expectations rising only 7% month over month when it had 7.8% expected. So, that's essentially what we're taking a look right here. Okay, you've got your private total housing authorized by building permits, and then your private housing units started by structured total monthly percentage change here. Okay, and that's where we're getting these numbers from. All right, again, you can see this rise only 7% month over month. It was 7.8% expected. And then we have this one here, tumbled 4.4%. All right. We're just not seeing good things when it comes to housing, right? Under the hood, multifamily rental permits plunged by the most since November of 2022, while single family permits rose for the 9th straight month. Multifamily units starts rose by the most since August of 2022. Right, the value of distressed U.S. commercial real estate neared $80 billion in the third quarter, its highest level in a decade, right? And that's why I brought up the KRE, the regional bank ETF, because of a lot of these regional banks, are a part of this commercial real estate disaster, right? And we're seeing the distressed commercial real estate swells. Offices lead distress as apartments dominate potential risk. Okay, so when you look at outstanding distress, that's going to be in black. Okay. So that's where offices are leading, but you take a look at the potential distress in apartments, it looks very, very risky here. Okay. When it comes to the, potential risk. Now, the inflation adjusted median net worth jumped 37% to 192,900 from 2019 to 2022. That marked the largest three-year increase in data back to 1989, and it was worth more than double the next largest one on record. So this is your family median, net worth essentially. All right, and real median net worth amongst all ages, it did surge 37%. But you know what also surged? Inflation, right? And you know what's also surged since then? Interest rates. Okay, and so a lot of these people that are making more money now, what's happened is their spending habits have not changed, right? The consumer has not stopped spending, and it's very possible that that will catch up to us, and be a potential really big headwind for the economy. Once essentially people realize I don't have any more savings, I don't have any more money to continue spending how I do, and once we see that drastic cut in spending, you know consumer is basically 70% of US GDP. So once we really see that big cutback from the consumer, that's when, GDP starts falling, and that's when, the possibility of recession increases even more. If you look at Redfin's home buyer index, it's at its lowest level in nearly a year. Okay, it's down 6% year over year. If you look at September existing home sales, those were negative 2% month over month versus the negative 3.7% estimate. All right, and then you have the negative 0.7 prior. The blue level is now at its lowest since October of 2010. All right, so we're just seeing existing home sales continuing to drop here. Okay, and it does not look good. This is not a pretty picture that we're seeing in the real estate markets right now. All right. The national median existing home price rose 2.8% in September from a year earlier to $394,300. So, I don't know what parts of the country you guys live in. Okay, but you used to be able to get a decent home, okay, especially if it was a starter home or one of your first homes for somewhere around 200,000 to 300,000, and now the average home price is basically $400,000. And if we just round that up, okay, to $500,000, I mean, we're not far off from $500,000. I mean, the median home price is almost $500,000, guys. I don't know about you, and I don't know you guys' situation, and I don't know. I can just say that, the average people that I know, they're not looking to go out and be buying $500,000 houses, right? When you just talk about your average person, I mean, $500,000 house seems quite extraordinary, whenever you say it like that. And it's pretty shocking. Okay. It's pretty shocking, that we're continuing to see home prices rise. It seems like they're actually starting to drop over the last, week or not week, but over the last month, in October. All right, we are starting to see some of these home prices drop, and we'll have to see how the October data comes out, once October is finished and once that data has been processed. Now, the home builder sentiment is at its lowest since January after an unexpected drop in October. It was the third straight monthly decline. So we talked about regional banks and how they're tied to commercial real estate. Home builders are another important aspect of the real estate, environment and landscape. And that's why we're looking at XHB, which is the home builders ETF of the S&P 500. Now, this is our housing market index. Okay. And again, you can see here, the third straight monthly decline. All right. And it's at its lowest level since January. And, this is not a good sign either. Right. So, I mean, all of this data that we're looking at does not look great for the real estate market. Now, I mean, is this potentially just, maybe one could say a buy the dip opportunity, right? Maybe there's a little bit of fear in the market surrounding it. Okay. And maybe, things are going to recover and everything is going to be smooth sailing in the future. That's a possibility. But to me, the bigger question and the bigger concern is this just a sign of what's to come? And could things really start to get bad, in real estate? And, real estate has a big impact on the economy. And if we see that happening, and that we see that start to fall apart in 2024, it's very possible that that could be one of the things that helps drives us into a recession in 2024. A home buyer must earn $114,000 roughly to afford the median priced U.S. home. Now, this is up 15% from a year ago and up more than 50% from the start of the pandemic. Okay. So literally, from the start of the pandemic, to now, you've basically had to make twice as much money to qualify for the median priced US home. That's the annual highest income necessary to afford a home on record, right? Now, of course, there's lots of inflation, okay? And so, it makes sense that the price that this is going to be increasing over time, okay? Because, the value of the dollar is getting weaker as inflation keeps on persisting, and inflation compounds over time, right? Technically you're going to need more money, and you'll be making more money in a sense, hopefully. All right, but still, this is very, very shocking here. Okay, I mean, when you take a look at it, right, this thing is historically in an uptrend, but take a look at the pace of the uptrend that we've really seen, right? I mean, August 2020, we're here at $74,000. And then 2 years later, that same time, it's up basically to $100,000, right? And in 1 year, we went up another 15%. I mean, the way that this is increasing, right? I mean, you're going to be needing to make 150,000 and then $250,000 just to qualify and afford the median priced US home, within the next 5 years. And, that's something that, I mean, when you take a look at the middle class, the, upper class, lower class, it's really just going to push the gap even further between, the upper class and the lower class, and, just continue to wipe out the middle class in the US economy. That's been very important, right? The middle class is the backbone, of the US economy, and, is part of that 70% of consumer, 70% of the GDP that is the consumer. A large part of that is, the middle class. All right, now let's get into the charts. Okay, and this is XHB. This blue box right here is a gap. Okay, and I mentioned in the newsletter, I've mentioned before in videos that, hey, we have a bearish chart pattern here indicated by these two trend lines. It's something known as a bump and run. Okay, and typically once you break that first trend line, you'll come down, look to test the second trend line, and then you'll end up breaking that second trend line as well. And that's how the bump and run plays out. And, we're seeing it play out very nicely here. It's almost near a 50% retracement level, right around $68. So if it does continue to go lower, it will be interesting to see if it can find some support around $68. But if it breaks $68, guys, that's a break of a 50% retracement, and the odds increase more and more and more the lower you go from there, of getting a full 100% retracement and seeing this thing do a complete U-turn. I mean, the big thing you want to be cautious of, in my opinion, right here, is going to be a dead cat bounce that results in an inverse cup and handle. Now, that may seem a little complicated or a little bit too technical for you guys, but a dead cat bounce is basically this right here and this right here, where you have this bounce, but ultimately it's a dead cat bounce just to continue going lower, right? You have this bounce here just to continue going lower. And so, and now that we've filled this gap, it's very possible we could try to find some support, but ultimately below $73, essentially, we're going to continue being bearish on the XHB. And, above 68, we're looking for the possibility of that dead cat bounce. Okay. So right now we pretty much have a range between $68 and $73 on the XHB. And we're going to look for clarity on the next move, right? Are we going to break above, or are we going to break down below? All right, if we do end up getting some type of dead cat bounce here, remember, I talked about the inverse cup and handle. Look at this chart right here. Doesn't that look like a nice, upside down cup, right? An inverse cup. If we result in end up getting a dead cat bounce, okay, that would end up putting in a handle for us. And then we would have an inverse cup and handle, that would be a very bearish chart pattern and continue to potentially take XHB down. Now, is that my top scenario that I think is going to happen? No. All right. But, it's something that we need to be cautious of and pay attention to, right? I mean, if something like that is going to play out, we want to try to prepare for that and ask ourselves, what can we do to protect our portfolios? What does this mean potentially for the stock market? Seeing home builders collapse if they were to collapse, right? This is XLRE. This is your real estate sector. This is a weekly chart, so it's a little bit more of a larger time frame. But we have this zone here where we bottomed out before in the past, right? Back in 2020, and then we tested those levels again and rebounded after the S&P 500 bottomed in October of 2022. And take a look, we're literally lower than the bear market bottom we just got out of, right? So, I mean, what does that tell you about investor sentiment and what institutions and hedge funds think about the real estate sector, right? It's something that they don't want to touch, right? We're literally lower than the bear market bottom that we were just in, right? We just got out of that bear market last year. And XLRE is still stuck in that same exact bear market, and it's actually making new lows, right? So the big question of, concern is, will this spill over into the S&P 500? Will this spill over into the economy, right? Is it possible that the S&P 500 can come back down and retest its prior lows, its prior bear market lows? Can it potentially do something like this where it breaks down below those? I mean, that's not something we want, but it's just something we need to keep an open mind about. So that way, if something like this does happen, right, we can come in here and we can prepare for it versus being caught blindsided and unprepared. Right. This is KRE. This is that regional bank ETF. Now, this is a even more zoomed out chart. This is a monthly chart. And I just want to stress the importance of this, right? I mean, we talked about and showed some of the data behind commercial real estate and, how things don't look great there. Okay. There's lots of signs of distress. And a lot of that commercial real estate is going to be due for refinancing. Okay. And a lot of that is through regional banks, which is the KRE. I mean, we all know about the banking crisis that happened due to treasury yields. Treasury yields, are actually much higher than they were when the initial banking crisis happened. So not only do you have commercial real estate, which KRE is a big factor in, you also have treasury yields also impacting this sector negatively. And it really would not surprise me. It's not something that I'm betting on or hoping is going to happen, but I would not be surprised if we see another type of, banking crisis, banking failure, or something related to that, especially in these regional banks, due to the commercial real estate aspect and due to the 10-year treasury just hit 10%, guys. When banks collapsed last time and Silicon Valley Bank collapsed simply because of their treasury portfolio, the 10-year treasury yield was not at 5%, and we just hit there. Okay. So that's another cause of concern. And these are things that you want to pay attention to behind the scenes, okay? While all of the attention is on Facebook, Meta, Amazon, Apple, things like that, Google, Microsoft, the Magnificent Seven, NVIDIA, you want to really look under the hood sometimes and dive into things and see, what's happening behind the scenes and what's happening underneath the hood that I need to pay attention to, right? Are there any warning signs? Are there any buying signals, buying signs? Signs of optimism. And when we start diving underneath the hood in some of the sectors and we really, ignore the Magnificent Seven, there's a lot of cause of concern. And there's some things we need to pay attention to. So I just wanted to highlight that in all of today's video. Hopefully you enjoyed it. Okay. And if you enjoyed any of the analysis and, you want to learn how to do some charting, or maybe you have a little bit of experience, but you feel like you need that one-on-one personal interaction, you can head to my Ko-Fi page using the link in the description. I do one-on-one sessions all the time. All right. And you can book those one-on-one sessions directly through the Ko-Fi page, right? I do 30-minute and 1-hour sessions, and we can go over whatever it is that you would like. Setting up, maybe if you're interested in day trading, swing trading, or maybe you just want to learn some charting or some of the process that goes into my analysis. I'd be happy to do that with you and schedule a time that works for us. You can also request a YouTube video on the topic of your choice through Ko-Fi, as well as click on this buy a coffee button if you ever feel like giving a tip or donation for the free valuable content I put out there for you guys. Don't forget to sign up for the newsletter. Okay, it's completely free, giving out free valuable content as well as free trade ideas. Remember, I talked about shorting the home builders in that newsletter over 2 months ago. All right. And we can see, looking at the charts today, as we just did, how that trade would have played out if you had been signed up for the newsletter and taken it. And if you want access to all of the charts and all of the different trade ideas, all right, you can just directly join the Investment Intelligence Discord. There's also a link for that as well in the description. Thanks for watching. Smash the like button, subscribe for more.